Hey everyone, the DeFi space, it has grown to over $260 billion in 3 months. And companies like Goldman Sachs and JP Morgan are now getting involved. So this company, a DeFi company, is now targeting institutions specifically. Who are they? Find out now in our latest podcast. Hey everyone, welcome to the Dales Report. And happy to be joined with the CEO, Jon Wiesblatt from LIQD Meta, who's going public this week. Jon, great to have you back on. How are things?
Things are going great. Couldn't be more excited. It's a big week for our company coming up.
Big week, that's for sure. First off, congrats. Happy holidays. How's everything been going the last, we had Jon last month, but over the last couple of weeks, I'm sure it's been 24/7 trying to get down to the last minute as you guys look to go public on the New York Stock Exchange.
Yeah, it's been a crazy 30 days. I can't tell you how proud I am of our team, our finance group, our back office, our legal team. I want to just make a shout out to Will DeBoer, Jeffrey Scher's team. They were fantastic. My CFO, my COO, our board of directors, our upcoming board of directors, like everybody pitched in, and we got to this point with the help of everybody. So thanks a lot to everybody involved.
It's exciting. Well, you're about to go public tomorrow, as I said, listing on the New York Exchange. Although crypto is down recently, it's a great time overall to be in the DeFi space. As you and I discussed in the past, this is an industry that's grown to $260 billion in the last couple of months, which is crazy. So tell us a little bit about the company's capital structure and operational goals for the first half of 2022.
Yeah, so before I get into cap structure, just a little bit about the company, a little refresher. So LIQD Meta is a technology company. We're providing investors the ability to access, automate, and really scale into decentralized finance. We are a business that is focused on liquidity mining inside DeFi. We're diversified, we're risk averse, and we try to deploy our capital in a very low volatile way. And you mentioned earlier that crypto has been down of late, and you know what? That's great for companies like ours because we are providing liquidity and capital through decentralized finance, like I've mentioned in the past, in a very low volatile manner. So Bitcoin, Ethereum, altcoins in general, they can rise, they can fall, and our business continues to generate very consistent and steady cash flow.
So your background, because you've been in the capital markets for quite some time, you ever seen such excitement in such a polarizing industry throughout your entire career with the way things are right now?
I've never in my entire career, which is 2 decades long, and studying the capital markets for greater than half of my life, I've never seen traditional finance, traditional capital as interested in a new and emerging ecosystem like decentralized finance. Anywhere from Goldman, Morgan Stanley, all of the big financial players, pension funds, they're all very curious as to what is going on in decentralized finance. These organizations, pension funds, sovereign wealth funds, traditional capital at large, they represent trillions of dollars globally that continues to chase yield in a very low yield environment. So curiosity is off the charts, and
it's exciting.
Yeah, it's a super exciting time.
Well, you'd mentioned your company, obviously, in the DeFi digital space, but unlike most companies in this space who are targeting consumers directly, your company is about targeting large institutions who are pivoting into the DeFi space. So let's learn more about institutions and the space. So why focus on institutions, and really how many of them are looking for this type of help right now?
So the question really is how many? We know that the interest level and the curiosity level is high across TradFi, traditional finance. The reason that we are targeting this segment or this niche segment of the market is for the very reason that yields are significantly lower than they have been over several decades. So we're at 1.4% on 10-year Treasury yields. Yields are low, and in parts of the world, yields are often negative. So, if we can bridge the gap between TradFi and DeFi and give access to, large pools of capital looking for better yield alternatives in a very low vol, in a very low vol method, then I think we have something. And so LIQD Meta is building the technology, the tools in order to, provide that exposure, that access. However, I think it's important to delineate that Liquid Meta today is using its own balance sheet. We're testing the water, so to speak. We have been for quite some time. We have been using our own capital to really, flush out security risks, flush out, the right ways to deploy capital, providing appropriate hedges, really doing what we say we're going to do. And while we're doing that, while we're building out our balance sheet, while we're providing capital from our own, capital, it's allowing us to really understand the best ways to build our technology that will cater to traditional finance and those alike over time.
So let's learn about the process to develop this technology. You're going to have first mover advantage. So what is your process, I guess, to develop a system that satisfies stringent, really institutional requirements, and what ultimately is the competitive advantage?
So the process all starts with Liquid Meta and, using our own balance sheet to really flush out those pain points, to really understand where the risks lie in deploying capital at scale across decentralized finance. So that's really the start of the process. And then it's building the team, advancing the team in order to build the products and the services that will cater to other pools of capital looking to really explore in the DeFi space. So, it's process starts with us. It starts with managing our own balance sheet and then moving and building products that will cater to everybody else.
You've stated previously that you'll be, Liquid Meta, the company's really first customer, testing the platform with live transactions before offering this to institutional partners. So what kind of knowledge specifically do you believe that will provide to, better serve potential clients?
So I think, again, it goes back to, managing risk. And parts of the ways that Liquid Meta manages risk is in a few ways. Let me outline them for you guys. So number one, it's deploying liquidity capital in a very diversified manner. So Liquid Meta at present, we're operating across 7 different networks or blockchains, across 15 different dApps or DeFi applications, and 20 or more different liquidity pools. So we never want to expose our capital to any one major liquidity pool in an effort to preserve the capital, right? So that's first and foremost. Number two, it's using really great technology to make sure that we're safe and secure. So Liquid Meta, whenever we're operating inside DeFi, it's across a very secure environment that was built for our own internal purposes. And we're also incorporating technologies like Fireblocks, which is a multi-sig wallet system that Liquid Meta uses. So always providing checks and balances when we're moving capital across this very nascent new marketplace.
How many exchanges did you say that you're currently working with heading into 2022?
Yeah, so right now we're on 15 different exchanges.
Wow. Okay.
Most of those are going to be tier ones and using tier one tokens to stake on those applications.
That's a strong start. So you're comfortable with that, or do you see additional partnerships manifesting into 2022?
So it all depends on how quickly we scale our balance sheet. So let's take a step back. Most of the exchanges and the liquidity pools that we're currently providing capital to, they're very, very large, so we can scale organically within those. As we continue to grow both organically and externally, increase the size of our balance sheet, increase the number of partnerships, we do believe that we will be able to find new and exciting ways to deploy that capital. That's
great. We focus on potential players and clients within the space. Goldman Sachs and JP Morgan are pursuing blockchain-related projects in the first half of 2021. So the opportunity to create a platform to facilitate transactions on decentralized exchanges, it appears, is huge. So if your development team can create a mainline platform that institutions will want and use, does this give you, I guess, the contacts to get this in front of institutional decision makers?
What I can say is that our team is very well versed across multiples of institutional channels. So our board of directors, our founders, our strategic advisors, a lot of the key employees within Liquid Meta are all very well networked and associated with prospective clients. So whether that's an institutional investor, a large enterprise, high net worth family office types that are looking for access. I mean, we are very well positioned to take advantage of that market.
Who are some of the names that you could maybe share with us that are on your board of directors?
So David Prusky, Stephen Harper, and Thomas Kang are three of our independents. Myself, Nico Del Pino, and we do have a new board member that will be appointed in the very new year. I would like to keep that one in our back pocket until we announce it.
So 2022, going to be a big year for this space. I know a lot of people, they like you, finding this polarizing. They're still trying to understand. Still trying to understand and learn the space itself. Where do you see this going? You know, like where are we, I guess, in 12 months from now, regards to this industry?
Yeah, so in June of 2020, there was less than $1 billion of total value locked. Today, we are above 260 billion, approaching 300 billion. I'm going to suggest to you that the trajectory of that total value lock, total capital deployed across all of decentralized finance, will continue to rise. I'm not going to suggest to you a growth rate. All I know is that it's going to continue to grow. And the various subsets of DeFi are also going to grow. So as the market evolves, more and more products and services are going to become available in decentralized finance, which is going to draw more and more capital. And again, Liquid Meta is going to provide the bridge, the tools and the services that are going to enable traditional finance to access this growing and emerging space.
Well, inflation's not going anywhere. And quite honestly, when you factor that in, and just better yields in general, this is a huge paradigm shift in our whole financial system. Do you not think?
I absolutely agree with that. Yields are low. Inflation's rising. It's become very, very crowded to, chase the next reasonable yielding asset class. DeFi is a solution for that. And so Liquid Meta plans to be, a major provider of infrastructure and technology to, provide access.
So you begin trading tomorrow on the NEO exchange. Why did the NEO make sense for the company?
So the NEO is innovative. It's home to many emerging sectors. They're forward thinking. And it's been a very smooth and seamless group to work with. And, if I had to go back and do it again, I wouldn't do it with any of the exchanges outside of the NEO. They've been wonderful.
They really are grasping onto the idea of these new emerging industries, especially in this space, but starting to build a name for themselves. But a great move. Begin listing tomorrow, trading tomorrow, I should say, under what's the ticker symbol? Liquid,
LIQD.
Excellent. Happy holidays and best of luck to you tomorrow. I know it's been a pretty exciting couple of months, but she goes live tomorrow, and I think it's going to be obviously pretty exciting for you guys as this industry continues to explode. But best of luck to you, okay?
Thank you very much, Shad. Thanks for having me.
All right, thanks, Jon.